Welcome back everyone to another MStrays video, and in this video I'll be teaching you the strategy that ICT himself taught me, and I'm going to be giving you all the source and value in this video, so make sure you do listen very carefully, and we're going to just get straight into it. Right, as you can see, this is the Silver Bullet 2025 model, okay, and you only trade this within a London kill zone 7 a.m. until 11 a.m. on a 5-minute time frame. Right, so what we need to do firstly is liquidity. We need to mark out the highs and the lows of Asian session. As you can see, I have an indicator showing me what Asian session is right here. This is Asian session right there in the blue area. What I need to do now is mark out the highs and the lows of Asian session. As you can see, this is the highest point right here I can see, and this is the lowest point of Asian session around here. And what I need to do after marking out my highs range, so this is the highs range right here, and also marking out my lows range. As you can see, this is lows range right there. And as soon as I mark out the highs range and the lows range, what I need to do is pay close attention, because we need to identify which part of price actually gets liquidated first. Is it the highs or is it the lows? I'm doing this on GBP USD, but it also works on Euro USD, NAS 100 and US 32. So what you need to do now is figure out which part of the price actually gets swept first. Is it the highs or is it the lows? If I keep playing price forward, as you can see, the lows have completely been swept. Right, I'm going to just move price back one bit to where exactly it's been swept. And as you can see, the complete lows of Asian session, as you can see A right here, that's for Asian session, and the lows have completely been swept. And now what we're looking for is finding a breakage of structure where fractional highs / lows have been swept. But look, we're not doing this like any other trader is doing it. We're not just waiting for price to give us the lows and we're going to trade, you know, the continuous trade. We trade reversal trades. So we're looking for a movement that gives us an uprise like this, and we're going to enter within the longs, right, within the long position. So what we're going to be doing now is playing price forward, so we can actually identify a breakage of structure or fractional highs instead of lows, because we're going towards the upside where fractional highs get swept, and we need to reinforce our market structure shift with an engulfing candlestick if possible. And you can see from here already, we already got an engulfing candlestick. So if I do just mark this out for you guys, you can see that we did actually get an engulfing candlestick, which is right here. Right, as you can see right there, engulfing candlestick. And what we're doing is making sure we do actually get our fractional high. And as you can see, this is right here going to be our market structure shift. And if I do put this as, you know, a normal line, you can see the fractional high right here has been swept. And I'm going to be explaining what a fractional high actually is and how you can identify it later on and more in depth. But what you need to do now is reinforce it with an engulfing candlestick. And as you can see, there's an engulfing candlestick. Everything is fully structured and everything works perfectly. Now what we need to do is just identify the actual fair value gap, and then we can overlap the fair value gap with a market structure shift to get a higher probability, and then we execute the trade. Right, so as you can see from here on out, what I'm going to do is mark out my fair value gap from these two areas, from the wicks, from the candle before and the candle after, right there. I'm going to extend this really quickly and name it fair value gap. Right, and as soon as we get the fair value gap, we extended everything fair value gap. What we need to do now is actually place our long position. Right, as you can see, we're going to place our long position right there, placing our stop loss just at the bottom of the fair value gap area right there. And we're going to be placing our take profit at least a 1-to-3 risk reward ratio. As you can see, even if I place it at Asian session's highest range, it still doesn't get to a 1-to-3. So we need to make sure we do place it at 1-to-3 at least. Right, so as you can see, that's 1-to-3 there. And now if I zoom out, it looks very, very amazing. It looks like an amazing setup, A-class setup. And this is the exact setups you'll be learning on how to take with me if you join my Telegram group right now. Because in Trader Accelerator, we will, okay, you will get coached one-to-one by me, MStrays, and you'll learn 2 trading systems, consistent trading systems that'll make you $15,000 a month within the first 60 days. Right, if you don't get these results in 60 days, you know, everything goes back to you. Right, you can see all of our results right here. This is one of my students who's making consistent trades just like this. You can see so much results right here. You can see another testimonial of why my mentorship is the best. So make sure you do click the first link in the description, join, and do actually put a fire emoji so I know you came from this video and I know to help you directly. But anyway, what I'm going to be doing now is playing price forward, and as you can see, price just entered right there, and I was going towards the upside, and it's a very, very clear uprise, and we could have easily smashed a 1-to-4, 1-to-5 with this, but we decided to go be humble and get with a 1-to-3, because our trading systems work so well because of our consistency, and our consistency comes from only having 1-to-3 risk reward ratio trades, only in the perfect A-class setups, right? As you can see right there, we would have a very, very high lot size, and we would put it at 1 to 3, and it will make us so much profits. I'm also going to show you this example on a fundamental level, so you actually get the full strategy and how to use this no matter what situation you're in. So as you can see, this is going to be Asian session. We're going to wait for it to do whatever it wants. Let me just name this really quickly, Asian session for you guys. And as soon as we actually name our Asian session, what we need to do from here on out is mark out our highs and our lows, right? As you can see, that's the Asian sessions highs, and this is Asian sessions lows. And as soon as we mark out highs and lows, what we need to do from here on out is identify which part of price gets liquidated first. Is it the highs or is it the lows? So what I'm going to be doing now is waiting for price to actually sweep one of these two areas. Let's say it swept the lows, for example. We're going to be getting this liquidity sweep right there, and as soon as we get a liquidity sweep, now we know that price will actually reverse and hit London sessions highs, and that's the exact trade that we're going to be taking off of and we're going to be jumping onto, right? So what we're going to be doing now is actually waiting for a price to give us that market structure shift. But remember earlier how I said I'm going to show you exactly what a fractional high is. Look, I'm going to do that right now. So as you can see in this example, you might have been really confused on where the actual market structure shift was. As you can see, there's 3 candles right here, and I'm going to be just circling this. And these pairs of 3 candles, right? So what we're going to be doing is replicating these 3 candles. As you can see, that's candle number 1. This would be candle number 2. And let's say this is candle number 3, right? So this is 3 candles right here. And the most important bit about actually these candles is the wicks, right? So I'm going to just actually extend this over like this. I'm going to just extend every candle just like this. Okay, as you can see right there, so the most important bit about these candles is the wicks, and that's exactly how you figure out what is the fractional high and what is a fractional low, right? As you can see, we can have price like this, and like this, right? And as you can see, you could easily tell which one is the fractional high, right? But some of you actually can't. So some of you would say it is this one, but it is not this one. It is the one in the middle, because the fractional high consists of 3 candle pattern, and the candle in the middle has to be the highest one in terms of wick only. Okay, it doesn't matter about the body. The body can be all the way down here for all I care, but if the wick is the highest one, it means that this is what we're going to be using as our fractional high, and this would be our market structure shift. And that's exactly how I mark this one out right here, because it looks basically the exact same, right? As you can see, it's just the body is a bit higher, but the wick is the thing that matters the most, and it has to be in the middle. As you can see, we would get the market structure shift right here. So this would be our market structure shift, and all we've got to do from here on out is mark out our fair value gap. So the fair value gap will be anywhere around here, fair value gap. And there's another thing. So if I do mark out my fair value gap, if I do mark out my stop loss a few pips below the fair value gap, it means that the fair value gap is way too thin for us to actually trust it to hold the price, okay? Which means we do need to put our stop loss a few pips below. And as soon as I do that, what you need to do now is literally just wait for price to come back into the area, come back all the way down, enter the fair value gap, and then it will go up to completely smash your take profit. And this is exactly how the trade actually runs, and this is why I have such a high win rate on this trade. It has like a 92% plus win rate, because this strategy works amazingly, right? It works very, very good. I use it. I've made $500,000 within the last year. I made it in 2024, $500,000 just using this trade, using pro firms and using live accounts, okay? And if you want to actually get the method and learn 2 strategies that I personally use for Asian session, London session, for London session and New York session, sorry, just make sure you join my Telegram, first link in the description. Put this fire emoji on the most recent post so I know you came from this video. But anyway guys, that's gonna be the end of the video, and I'll see you in the next one. Take care.